Thursday, December 6, 2018, Maneco 64, home of alternative economics and contrarian views. This morning, I'd like to talk about the dollar index in particular. I made a video in July last year and another one in October talking about the dollar. The first one in July, the title was Long-Term Dollar Top Pointing to Massive Bull Market in Gold and Silver. And I didn't mean to say that the bull market, of course, would start right then. Long-term bull market, because it's a long-term dollar top. And today I'm going to touch upon that again because I saw an interesting article on King World News. And it's very similar to what I've been saying for, well, about 9 months now, or over 9 months, over 12 months about the dollar and the top it made in the beginning of 2017. I know gold hasn't taken off yet, but my opinion is that it will eventually. And so is the opinion of this article on King World News. Before that, of course, I'll look at what the markets are doing. We have some interesting developments, even though the technical picture still looks pretty bad in the markets. Prior to, the break or not a holiday, but the closure of the market yesterday, the Dow, of course, dropped 799 points. So technically it didn't look great. So it's not surprising that it's down another few hundred points this morning. They're attributing it to the arrest of the CFO of Huawei, which is a mobile phone company of China. They compete, I guess, with Apple. It's funny because a few weeks ago I went to the Vodafone store here and I was looking at the Huawei phones and they look very nice. And so the headline in Zero Hedge says, China outraged at arrest of Huawei CFO, warns it will take all measures. So, and this arrest happened on December 1st, which is, just around the time when the Xi and Trump met, or just after it, I think. She was arrested in Canada, and the U.S. wants her extradited. And it's interesting because the headlines, the cover for the Economist magazine this week is called Chip Wars. And it says America, China, and Silicon Supremacy. And in the pre-article that they have, Chip Wars, it says, Mr. Xi talked up core technologies. Its tech giants are on board. Alibaba, Baidu, and Huawei are plowing money into making chips. And China has showed that it can hinder American firms. Earlier this year, Qualcomm abandoned a bid for NXP, a Dutch firm, after foot dragging by Chinese regulator. And why would Chinese regulators foot drag on Qualcomm? Because Qualcomm sells a lot of stuff to China. So it's interesting that this is happening. It's not just cars or other goods, but the chip, semiconductors seem to be very important. And Huawei is a big part of it. So I guess that's why it's sometimes good to read what the enemy says. The articles from The Economist, you keep abreast of things, what's going on. But personally, I think just the technical picture looks bad. I think we'd still probably be down, if we hadn't had this headline. Who knows? But so it's a little later this morning, 8:30 a.m. So let's have a look at what we're doing here. The spot gold is down slightly, 1235.60. High has been 41. The low has been 1234.50. So as I said, strong resistance around this 35 to 40 level. Silver, unfortunately, has been hit fairly, not that bad, but it's 30 cents off the highs we saw earlier this week at 1467. It's at 1438, down 11 cents, 0.8%. The Dow is down 300 points here this morning, 24,750, sorry. The low has been 24,550. So we've been down about 500 points overnight. I wasn't awake to see that. The S&P is down 35, 1.3%, 2672. NASDAQ 100 is down 108 or 1.6%. Currencies fairly steady. The pound is down about 0.2% at 127.10. Euro is down 0.1% at 113.28. Dollar is down 0.16% against the yen, 113.01. And the dollar is up against the yuan, 0.33% at 688. Crude down 1%, both Brent and WTI. What about the 10-year yield? Is 291. The curve, let's have a look. And there's a lot of talk, of course, about the inverting yield curve. So this morning we've got the 2 years 2.785 and the 5 years 2.784. So it's kind of the same, but slightly inverted, the yield curve. What about the dollar? I was talking about the dollar. Well, there's the dollar index in particular. There's a headline here: gold set to explode higher. Top city analyst, that means Citibank or Citigroup analysts, just predicted U.S. dollar index to crash below 70. It doesn't mean it's going to do it tomorrow, of course. It's more longer term. And he talks here, U.S. dollar had the lower U.S. dollar index peaked after 8 years and 10 months, just like previous cycle high in 2001. And he looked at the same thing I did back in 2017 on my videos. The first one, long-term dollar top pointing to massive bull market in gold and silver. That was July 27th. And we haven't seen the dollar higher than that level of which I spoke in July of 2017. We have had a rally since April in the dollar, but as I've said, I think it's a counter trend rally, and so does this analyst. What's his name? I think it's Tom Fitzpatrick, right? And it's interesting that he goes through all the cycles that I went through, and how we're set to go lower. And I haven't changed my view. The other thing I pointed out in some of the videos that I'll put them up in the cards and in the link, and the link below in the description, both of my videos. One thing I talked about is the fact that in 2008, the dollar index bottomed at 70.69 and gold topped at 1,031. And ever since then, the dollar has gone higher. It did make a low in 2011, but it didn't break the 08 low. And in spite of that, and then of course it topped at just below 104 around the beginning of 2017. I think it was 103.84. And in spite of that, you would think that with the dollar index going from 70.69 to almost 104, that gold would be down below 1,000. But no, we're still here above 1,200. The fact that the gold has actually gone up since the dollar bottomed in 08 is very positive. Of course, in between, we've had these sharp moves. We made a new high in gold even when the dollar was higher back in 2011. It just shows how the secular bull market is so strong in gold, and that's one of the reasons why not only technically but fundamentally I hold gold, and I try to add physical gold and silver as much as I can. Of course, it's not possible all the time. It's just like saving. It's a good insurance policy against monetary mayhem and crisis. I don't look at it as a speculation and making, and becoming rich. It just preserves your wealth, having gold and silver. I did say, in my second video from 2017 about the dollar, which I did in October of last year. I said dollar super tank turning slowly but surely south. So you look at these charts that Tom Fitzpatrick put on. These cycles are long-term cycles. They happen over 8 to 7 years or so. Index, precious metals, we need to keep the focus and not be distracted by all the distractions out there, trade war, Q drops, arrests. Yes, those are very interesting stories, and I look into them as well. But at the end of the day, I don't think anything's going to change. Politics is just something to make the public pretend to the public that they're in charge of their own destiny. I think it's much more important that you're in charge of your own financial freedom. And that's the only way I think you can try to be free, is to have financial independence. And having a sound base of precious metals is one of those things. I'm not an advisor here, financial advisor. I have worked in the financial sector, but I'm just telling you what I think, and hopefully, you come up to your own conclusions, do your own homework. That's what I have done for the last, decade plus. I do my homework and do a lot of reading, and I look at people that I like and see, what they're saying, be open to a lot of opinions. If you enjoyed this video, make sure you hit that like button. Subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day, and I'll talk to you later. Take care. Bye.